When the oil price rises, most people buy Shell, BP, or a pipeline. Makes sense, but there's a stock that went up 6.4% today, and it's because of the oil price. And no, it's not an oil company, it's a sugar company. Today I'm going to show you a connection that almost no one has on their radar. Why high oil prices drive up sugar prices and which stocks can benefit from this. The connection comes down to one word: ethanol, bioethanol, biofuel. And most people don't know this, but a large part of it is produced from sugarcane. Not from corn and not from grain, but from sugar. And the largest producer in the world, well, that's Brazil. They have a unique system. A sugarcane mill in Brazil can decide, do I use my cane to make sugar for export, or do I make ethanol for the fuel market? And here's the trick: when the oil price rises, the price of gasoline goes up too. And when gasoline becomes expensive, ethanol as an additive suddenly becomes really profitable. The mills do the math and say, why should I export sugar for 31 cents per kilo when I can earn more with ethanol? And the numbers prove this perfectly. In the 2024/2025 harvest season, 57% of Brazilian sugarcane went into ethanol production. In 2025/2026, this shifted to 49% ethanol because sugar was more attractive. And now for 2026/2027, the forecast, the swing is shifting back to ethanol. Why? Well, due to the current oil price. And what is the result here? When Brazil switches to ethanol, less sugar reaches the world market. Supply decreases and the price rises. This is simply a classic supply and demand scenario, and that's really all there is to it. And this is not just a theory. Just last week there was a fire due to geopolitical tensions, and on the very same day, New York sugar rose by 3.3% in a single trading day. The mechanism is simple, but also incredibly powerful. Oil goes up, ethanol becomes more profitable, Brazil produces less sugar, sugar prices rise. This is not a correlation by chance. This is direct causality through the Brazilian mill switch. To understand why this has such an impact, you have to grasp the scale. Brazil produces 663 million tons of sugarcane per season. That is by far number one, and that's worldwide. More than India, more than Thailand. The next two combined don't even come close. And this sugarcane goes in two directions: sugar for export or ethanol for the gas station. In Brazil, most cars run on flex fuel. They can fill up with E25 or even E100. Ethanol isn't a niche product there, it's actually mainstream. When Brazil decides to produce less sugar and more ethanol, we're not talking about just a few tons. The forecast for 2026-2027, Brazil's sugar exports could fall by 14.2%, and that's millions of tons simply missing from the world market. And then there's the corn ethanol factor. Brazil is currently massively expanding its corn ethanol production capacity. That does ease the pressure on sugarcane a bit, but Bloomberg has shown that even this isn't enough to absorb the ethanol boom if oil becomes more expensive. Which stocks benefit from this whole scenario? Number one, and the reason I'm making this video, is, among others, Südzucker. Today's share price is €11.17, up 6.4%, the highest level since July of last year. Why is that? Südzucker has a double play. First, they are Europe's largest sugar producer. When the price of sugar rises, their margins increase. Second, and this is what most people overlook, they own CropEnergies. That's their bioethanol subsidiary. They produce ethanol from grain and sugar beets. When oil prices rise and ethanol becomes more profitable, CropEnergies also earns more here. Barclays has just upgraded the stock by 2 notches, from underweight straight to overweight. The price target here is €15, which would be another 34% above the current level. Let's also take a quick look at where I entered here, meaning at what price. And here we can already see profit over the last 7 days, Südzucker in my portfolio with 27%. My entry was around €10, which is roughly at the 52-week low. But be careful, the numbers are not great right now. Revenue in the first 9 months of fiscal year 2025 is down 15%. CropEnergies segment at 609 million euros instead of 711 million. Maintenance issues, low ethanol prices until recently. And that's the reason why the stock was trading so low and why the rebound potential could be so significant now. If you want a pure play on ethanol, CropEnergies is 76.9% owned by Südzucker as a subsidiary. So basically the ethanol segment as its own stock. If you believe that oil prices will remain high and ethanol will stay profitable, then this would be the direct leverage. And then there's the Brazilian giant, namely Raízen. It's a joint venture between Shell and Cosan. Cosan is also in my portfolio. The largest sugar and ethanol producer in the world, with $45 billion in revenue and 2.2 billion gallons of ethanol per year. They are currently building 22nd generation ethanol plants, meaning ethanol from waste products, and that is also a technology for the future. But Raízen is currently facing a problem here as well. Cosan reported a loss of 5.8 billion reais in Q4 2025, burdened by Raízen. Shell and Cosan are currently negotiating a capital injection, so this is not a no-brainer, and here too it's a turnaround play. Cosan is the parent company. They have Raízen plus logistics, lubricants, gas distribution, and a market capitalization of $4.3 billion. Anyone who wants the entire Brazilian ethanol story in one ticker, but is also willing to accept the holding discount risk. So, I am also invested in Cosan simply because you know that Brazil has some of the largest agricultural areas and is ultimately one of the biggest food producers as well. You basically can't get around the Brazilian market, and that was actually my main thesis back then, to simply invest in this sector in Brazil. For German investors, Südzucker is the easiest way. Listed in Frankfurt, no currency risk, double play through sugar and CropEnergies. For those who want more risk and know the Brazilian market, Raízen is the global leverage, or alternatively, Cosan. The sugar price has been on a roller coaster ride. November 2023, 62 cents per kilo, the highest level since 2011. Then the crash. Today we're at around 31 cents per kilo, so almost half, or actually exactly half. That's a halving in just over 2 years. Why? Good weather, high harvests in India and Thailand. At the same time, Brazil produced record amounts of sugar and the market was in surplus. And this is exactly the point, at 31 cents per kilo, we're at the production cost limit. Even for Brazil, the most efficient producer in the world, things get tight at this price. And it's precisely in this situation that the oil price trigger comes into play. When oil rises, ethanol rises, and the Brazilian mills switch away from sugar. The surplus melts away. With constant demand and decreasing supply, there's only one direction things can go. The sugar price is at 31 cents per kilo, a natural lower limit set by production costs. The oil price is the catalyst that's been missing. If Brent goes above $80 and stays there, I see sugar prices reaching 40 to 48 cents per kilo, and that would be a game changer for Südzucker and similar companies. What could speak against this? First, corn ethanol. Brazil is massively expanding its corn ethanol capacities. That could take the pressure off sugarcane. Less switching is necessary because ethanol comes from corn instead of sugar. Bloomberg calls this the corn ethanol boom. Second, global sugar surplus. India and Thailand are producing at record levels. Even if Brazil cuts back, others could make up for it. Third, the oil price, of course, is unpredictable. The entire thesis stands or falls with the oil price. If Brent falls to $50, the ethanol play is dead and the sugar price will continue to drop. Fourth, CropEnergies is facing operational problems. Maintenance outages, technical issues, revenue down 15%. This is not a clean company right now, and this is also a turnaround situation here. Fifth, regulation. Biofuel mandates can change. EU policy, Brazilian tax policy, these are all variables that no one can control. One thing I'd like to add here, yes, that's correct, but you also have to consider why I bought Südzucker. Not because of the oil plays, but I bought Südzucker because it's simply the brand you know from the classic discount store. You go up to someone and say you need sugar. What can you see? Südzucker. That's just how it is. And that's why in my eyes, it was simply a foodstuff that you ultimately need, especially in winter at Christmas when you're baking cookies or whatever. And that's why I found it interesting, of course. The whole oil story itself is of course super interesting as well, but for me that's just, let's say, a nice benefit if it works out. So, the connection between oil prices and sugar prices is real, provable, and highly relevant right now. And that's not just some theory, it's happening right before our eyes. Südzucker rises by 6.4% in a single day because the oil price is going up. If you're bullish on oil but don't want to buy the obvious oil stock, here's the alternative. Simply Südzucker, or in general, sugar stocks as an oil proxy. Südzucker with the double play, CropEnergies as a pure play, Raízen for the adventurous, or Cosan. My take. This is one of those connections where once you understand it, you can see the market from a completely different perspective and really grasp all the interrelationships. Back then, in my first videos, I also talked about this sector rotation or just understanding the market in general. That was also part of it back then, not specifically with sugar, but for example, when agricultural products tend to be more expensive, and when they tend to fall because the new harvest comes onto the market, has to be sold, and thus creates a surplus. Just go ahead and take a look at it. I'll link the video for you anyway. Yeah, so what does that mean? Don't just look at Shell, look at sugar as well, and feel free to write in the comments how you assess the situation in the end, and whether this was new to you or if you already knew it and are thinking, come on, what are you talking about? Everyone basically knows that. Maybe that's the case, maybe not. All good, but in any case, that was a nice review. So write it in the comments. As I said, give me a like. If you're not a subscriber and don't want to miss any more videos, I'd appreciate it if you subscribe now. Otherwise, I'd say take care of yourselves and your portfolio as well. Of course, this is not investment advice, but simply my personal strategy. Naturally, everyone has to do their own research and make their own investments. Otherwise, I'm looking forward to seeing you in the next video. I'd say until then.